And happy Monday to you. I'm Marlon Bowling, and we are off and running with our futures trade today. And here to get some expert analysis on today's market activity, we go to DeweyStrickler. He's with AgWatch Market Advisors in Franklin, Kentucky. He joins us right now. So on the phone, Dewey, thank you so much for joining us today. This could be an interesting week, especially in the last half of last week. Boy, a lot of negative pressure on the markets. Overnight, it appeared to follow through. Let's take an early look at opening trades here today, Dewey, and see how the corn and soybean trade is opening up. We'll look at the wheat as well. Right now on the corn, on the open, we have everything down 4 cents all across the board on the corn. We have December new crop down 4 at 3.70 3/4. Let's take a look at soybeans. How are they opening up? Well, under double-digit pressure, we have September down 11.5 at 9.26 3/4. By the way, I will remind everybody, the August contract disappears today. Last trading day for the August contracts. November down 12.25, and now down 12 at 9.33 even per bushel. So within a penny of our low of the session in the overnight trade too. Wheat trade, we'll throw that in there, no extra charge. Chicago wheat, September down 6.5 at 4.32 3/4. And in the Kansas City market, we have September now opening up about 9.5 lower at 4.31 3/4, only 2 ticks from our low of the day. And if you look at the Minneapolis market, spring wheat market really getting pounded on again to open up the week. September down 22.5 at 6.51.5. Dewey, your thoughts on the openings that you're seeing here so far?
Well, Marlon, basically what it is just continued fallout lingering from last week's crop report. A lot of people think that the USDA proved that if you do have a big enough hammer, you can pound a square peg into a round hole.
So what did you think of those numbers when they came out? I haven't got your opinion yet.
Okay, I think they're off, and there's a couple of things that come to mind. One, has the USDA changed their methodology as far as like measuring ear weight? When you look at corn, the ratings 3 points below the 10-year average, and then a yield of 169.5 bushels to the acre. Something just doesn't add up.
Okay, so let's talk about this soybean trade here. Now, this is the month of August. This is the critical month for pod filling time. Everybody acknowledges that. But from what we can tell, I mean, most areas are okay on moisture. Not all, but most. And it seems like the forecasts, at least out into the medium range forecast, that will take us almost to the end of the month, Dewey. It seems pretty non-threatening right now.
That's exactly right. When you look at the 8 to 14-day forecast going through August the 27th, we're looking at mostly normal to above normal moisture, which means that really right now going forward, weather doesn't seem to be much of an issue. It's losing its impact.
Now, what about this wheat trade? We've been watching that this morning, and you have Minneapolis just really falling apart, while the other two are lower, Chicago and Kansas City being lower. Minneapolis has really taken a back seat to the other two for several days now. Is that going to continue very long?
What I'm looking for, Marlon, I'm looking for this market to stabilize, to have a 1-day, 2-day bounce, and then go down and then post the final low.
Okay, now I want to take a look at the cotton market before we get into our break. And on the cotton, we have pressure continuing today. The overnight trade was lower as well. December cotton, the new crop contract is down 53 at 67.72. So that's a look at how we're finishing up here, or at least on this segment here. First look at our grain trade. We're going to come back in a moment, and we'll talk about our livestock trade with DeweyStrickler when we come back after this. Thanks for joining us here on a Monday. We're talking right now with DeweyStrickler of AgWatch Market Advisors in Franklin, Kentucky. And we are going to talk about our livestock trade and see how things are opening up. Dewey, thanks for joining us. I appreciate that very much. Always good to visit with you. And as we open up a brand new trading week, let's dive right into our futures trade. And let's see how the live cattle are trading this morning. And everything closed on a higher note Friday afternoon. Can they continue this morning? Well, on the live cattle board, the answer is, well, it's mixed. We have have October live cattle 15 higher at 107.55. December down a penny now, and you have February down 3 cents at 111.15 per hundredweight. So everything just very narrowly mixed here in the live cattle to open things up here today. Meanwhile, on the feeder cattle trade, on the feeders, we'll start with September. We are 16 higher now at 142.38. And you have October 22 higher at 141.82. Dewey, these cattle contracts are not venturing very far from unchanged here in the early going today.
No, that's right. And when you look at the market, technically, you look on the charts, we have what is called a double inside day. And that means we got a little bit of hesitation on the part of the sellers down here. So that said, you might see the October get a little bit of a bounce to about 109, but with box beef down last week, higher production numbers in the forecast, I think we'll eventually see this October contract come down to the 105, 104.50 mark.
Yeah, given the cash trade that you saw last week, we noted here earlier in the broadcast about the fact that the futures are still at a several dollar discount to the cash trade there. Which one do you think is going to win out and hold more ground?
I tell you what, that's a good guess here. You know, I have never been very good at trying to predict that. It's very difficult here to do so. We've seen these discounts here staying with us for quite some time, and it just seems like, you know, the extremes seems to be more of the norm now.
Okay, so let's take a look at how we're opening up in the lean hog trade here today and get a look at our futures open. Right now, August, and I'll remind everybody here, August goes off the board today. So I believe it goes off at 12 noon Central Time, if I recall right here, Dewey. 3 cents lower on August at 84.62. October now 47 higher at 69.10. So the spread is narrowing up today, but boy, they have a long ways to go. They're about $15.50 apart. December now up 13 at 63.38. How many implications do you think that will have on the market here with the August disappearing after the noon hour today?
Well, I think it may take a little bit of pressure off of the market for that reason there. I mean, we're still looking at a huge discount here has been supported to the futures. Technically, the market looks good on the October contract, and looks like to me we're going to probably head up to at least 70.5 here. Now,
we had lower pork carcass cutout values on Friday afternoon reported by USDA. Did that concern you very much?
And the way the market's acting here today, no, it doesn't.
Well, Dewey, I appreciate the comments, and if somebody wants to get in touch with you and talk about the markets, how would they reach you there?
Well, you can contact me directly. My number is 270-586-9051, or they can visit my website at www.agwatch.biz. That's B-I-Z.
Very good. Thanks, Dewey, for helping us open up the week. I appreciate it very much. DeweyStrickler of AgWatch Market Advisors, and he is based in Franklin, Kentucky. Janet, there you have it. We're off and running.
All right. Thank you once again, Marlon. Appreciate that.